Welcome to the First Mining Gold webinar. First Mining Gold is a Canadian gold mining company, a developer with not one, but two 5 million ounce projects in Canada. They have a handful of other projects as well. We will touch on all of that, but I want to introduce you to Dan Wilton. He's the CEO of First Mining Gold, and we're joined by Keith Neumeyer. Keith is the founder of First Mining Gold. He's the chairman of the board, a major stockholder, and he also serves as the CEO of First Majestic. Welcome to everyone on the webinar, and Keith and Dan.
Well, thanks, Ron. It's great to see you again. Great to be here with a broader audience.
That's right. Yeah, we have a number of my subscribers I know who were very anxiously awaiting the opportunity to hear from both you, Dan, and Keith. Keith and Dan, if you wouldn't mind, or maybe Dan to start out with, can you give us a brief overview of the company so that the viewers get a handle on First Mining Gold?
Sure. We'll do a brief overview. And again, welcome to everyone and thanks for joining us. First Mining Gold was founded in 2015 by Keith Neumeyer. And at that time founded as at a unique opportunity in the market where development projects and good resources were trading for far cheaper than you could find them. A lot like today, in fact. So Keith's probably better one to tell the story about how it was founded, but they decided to go out and acquire a portfolio of projects and ended up buying 8 projects in 12 months, many of which were acquisitions of public companies. And that gave us a portfolio of projects that we still have today. Now, out of that portfolio, there really are 2 that we're spending most of our time and energy and focus advancing, and that's the Springpole Gold Project, which is a big 1 gram gold and 5 gram silver open pit project in northwestern Ontario that's well advanced through the environmental assessment process and about 90% done a feasibility study. And last year we acquired the balance that we didn't already own of the Duparquet Gold Project in the heart of the Abitibi in Quebec, which again is, we put out a resource last year, 3.5 million ounces of indicated resource, another 1.5 million inferred, 4 million ounces in an open pit, another 1 million ounces underground. So really one of the biggest undeveloped gold resources in Quebec. And what we're really excited about, we'll talk about this a bit, Ron, is just the exploration potential around both of these projects. You know, we've talked about this before, but starting, you know, each of these projects in real mineral districts with 5 million ounces as your starting point is a great place to look to be able to continue to grow those. So very exciting.
Outstanding.
Just one extra point I'd like to make, Dan, is the those 8 companies that you referred to that we purchased from, you know, really early 2015 into mid 2016. Not only was the market cap $650 million, but Springpole, you know, had a PEA on it and was, you know, clearly showed 5 million ounces of what we consider economic ounces in one of the best jurisdictions in Canada, in Northern Ontario. But with that portfolio, we also owned 10% of Duparquet. And, you know, kudos to management for buying the balance. It took 7 years for First Mining to buy the balance of Duparquet, giving us 2 5 million ounce deposits, one being Quebec, I think probably the, you know, first or second best jurisdiction in Canada, and Ontario, you know, close by or right there. So you've got 2 5 million ounce assets in 2 of the best jurisdictions in the world.
Would you say, Keith, when you look at the drilling alone that's been done, I think at the Duparquet project, it's north of 270,000 meters of drilling. That alone, what would that cost in today's dollars to replicate that? I mean, a rough estimate. Any ideas what kind of cost figures people would be looking at?
Well, I would guess 50 million.
Okay.
Yeah, that's probably in that range would be my guess, Keith, by the time you factor in, I mean, the drilling and all the other associated costs. And that's just the drilling. That doesn't go to, you know, a full-blown environmental baseline report done in 2016. It doesn't go to 3 years of metallurgical optimization that was done in 2012 to 2014. So I think if you look at the overall real spend that happened at Duparquet and the value of trying to replicate that today, I think it's $100 million.
Wow. Wow. Yeah. When I
it
look
was
at,
also an old mine, Ron. This is an old mine, historic mine that was operating for a few decades, producing gold, and it will be a mine again. We'll get it in production through joint ventures or through ourselves. However we do it, it will be a producing gold mine once again. And well, Springpole will as well, of course, but that has never been a producing mine. That's completely grassroots discovery that happened back in 2010.
okay. Okay. When we zoom out a little bit, and everything we look at with the company is happening within the context of the overall precious metals market and the sector in general. Can you share some thoughts of what you see happening right now with the gold price, the silver price? It feels like the world is moving away from the dollar and back to gold, and we know there's a compelling story for silver as well. Keith, would you mind giving us your kind of thoughts on the current metals prices and where we might be heading?
Sure. I look at I'm in charge of sales of our metals at First Majestic as a CEO, and it's great seeing sales of gold going out the door north of $2,000 an ounce, and not that I like the silver price. Silver at $25, $26 is much better than where it was over the last couple of years, but nevertheless it's still a reasonable price. The equities have not moved. Actually, the equities have diverged from the metal price, which is pretty surprising. As an executive of a couple of mining companies, First Mining Gold and First Majestic Silver, I would have guessed that we would be seeing our prices of both companies trading where they are at these metal prices. As I said earlier on, First Mining had a market cap of $650 million in the mid 2016, and I think that gold was probably sub $1,000 at the time, or thereabouts. And silver, I forget, silver was probably, well, actually 2016 metals actually rallied. Going back to 2015, they were much lower, with silver in the $12 range and gold sub 1,000. But 2016, the metal prices did improve substantially, which of course drove the equities, which made sense. But this time around, we see metal prices much higher than they were actually in 2016, and the market caps of these mining companies, including the two that we're talking about today, are much lower than they were back then.
Do you think that creates an opportunity right now for investors in First Mining Gold, other development companies as well? This disconnect, I was thinking about it as like the tale of two cities, right? Yeah, the metals prices are great, but we're still, like, we have a lot of, I want to look at it from an optimistic perspective with First Mining and with the whole sector, that hey, there's a big runway, there's a lot of room for growth and improvement ahead of us, that the value proposition right now is probably about as good as we've ever seen.
Well, the entire sector is very underinvested in right now, and that's really what the issue is. We still have this buy the dip mentality in the U.S. markets. We have Apple trading at near highs, all-time highs, which is pretty shocking with a $3 trillion market cap. Tesla has doubled in price, or virtually doubled in price, over the last few months. There's people thinking that the S&P and the Nasdaq are going to reach new highs in the next couple of quarters, and I can't believe that rhetoric. I can't imagine it actually happening. Personally, I'd be on the other side of the market, or at least those big markets. But you really need, and I've said it for a few years now, that you really need rotation in the marketplace. This sector is underinvested, and it's just simply being ignored. And the cash flows, the metal prices, it's all there for us. It's just the investors are just simply ignoring this market. There will be a catalyst that will bring investors back into this space. And this space being so small, as we all know it is, it doesn't take a lot of investors coming into the gold and silver space to really move these markets. And we've seen it a number of times. I put First Majestic together 20 years ago. We put First Mining together. It's been 8 years ago. We've been in many cycles. I've seen many cycles, and it's going to happen. It's just you just don't know what the catalyst is that drives it. It's just a series of events happens all at the same time, and you wake up one morning and all of a sudden, First Mining's trading at 50 cents. You go, oh my God, I should have bought more. That event will happen. You just don't know when.
Right.
Yeah, and I think one of the things that's interesting, and you talk about how some things are moving. If you look at your sort of intermediate gold producers, so kind of the mid cap gold producers specifically, or smaller cap gold producers, a lot of those are already up 100% from where they were 6 months ago. A lot of that is, sort of general, where there has been a little bit of funds flow increase, I think, has been through the GDXJ. And those are really kind of those GDXJ constituents that have seen the increase. But we haven't seen that trickle down beyond a handful of names. And as Keith says, we've all lived through a number of these cycles. It always happens. We saw it in 2020 where on the back of, really kind of the COVID lockdowns, you had the gold price run. The gold price ran, and then, the producers ran next. And then there was a period of about 6 weeks where all of a sudden there was tailwind and interest in developers. And in that time, as Keith said, we saw our share price go from 18 cents to 55, over the course of about 6 weeks. So I think it absolutely can happen. And when you talk about the setup that's there right now, it's the best macro setup for developers, I think, that we've ever seen, because most producers just have not spent the money in building out their pipelines. It's the same thing that Keith saw in 2015 when he put the company together. You're buying resources because no one wanted them and no one was growing their own. And so you knew somewhere down the track, 5 to 10 years, you just can't replicate this work and those resources in the ground that were there. I think we're at that kind of situation now. And so what we're going to see, I think, is that value difference is going to get closed by the M&A market to a degree. And you're starting to see it. You're starting to see producers becoming more active in buying developers.
Interesting. Is it safe to say that the big companies, the Barricks of the world, the Newmonts, that they've underinvested in their in-house development projects, and that they will most likely, let's say, in the coming 2 to 5 years, be forced to look at, let's just, for instance, say 2 5 million ounce projects located in Canada? Is that a safe statement?
Well, I think this dates back, to 2011, 2012.
Exactly.
You've got management teams today that are quite shy. You've got the majors, at least the ones I've seen do valuations, still valuing gold assets at $1,200 or $1,400 an ounce, which is pretty ridiculous. So when you have these mining teams or these executive teams of these major mining companies not valuing assets at spot, what does that tell the marketplace about what their view of the future gold prices are? So if they have those types of views on the gold price going forward, which quite honestly, they're engineers mostly, and quite frankly, shouldn't be asked about future gold prices. But nevertheless, they do have their views, and they price their assets according to those views. And I think that's a lot of times what the institutions see, and the executive teams have actually realized what they were producing and what they're selling. Like, for example, I saw a question come up, what's my view on silver, and are we going to see the ratio collapse? I'm a $3,000 gold guy, and I'm a triple-digit silver guy. And that sounds kind of ridiculous when, we're just breaking through $2,000 gold and at $25 silver. But I expect ratio collapse, and with gold at 3,000, that puts silver at some ridiculous number that's not even worth mentioning. But I think I'll be right. And then at that point, you're going to see the institutions start coming into this space, and whether gold breaks through 2,300 and that's going to happen, or who knows what that catalyst is, as I touched on earlier, but it will happen. And it is, as again, this is almost a gift for retail shareholders. And as Dan mentioned earlier, when I was putting this portfolio together, I had a group of geologists go through all the public companies in the mining space, including Australian listed public companies. And we set up a criteria, or I set up a criteria for them. And they gave me a list, and we eventually broke that list down to the top 10 companies, and they just happened to be all Canadian-based gold assets because they were the cheapest in the world, trading at ridiculous prices, sub $10 an ounce in the ground, after tens and tens and tens of millions of dollars have been spent. And these mining companies were trading at pennies on the dollar to what was actually invested in the ground. I was able to convince 8 management teams to join First Mining Gold, and because they really, quite frankly, had very little choice because there was no money available. And as a combined company, we became much stronger. And today we're a very strong, financially sound business, developing 2 of the biggest gold assets in Canada. And Dan's done a fantastic job. And this, looking at the share price, you can never tell it, because you look at the share price, you think, oh, there must be something wrong. But in fact, no, there's nothing wrong with the business. It's actually going quite well. But de-risking, it takes time, and eventually the big institutions or the big the Newmonts, the Barricks of the world will notice. And well, they're already noticing. They're watching, but it takes them time, and eventually something will be that catalyst, as I mentioned earlier.
Keith, I appreciate you saying that, because I agree with you. I think Dan is doing a great job myself as well. I think, and I'd like to get your thoughts on this, that the company over the last 3 years in particular has made sound, long-term strategic decisions with the shareholders in mind. And as opposed to maybe some quick short-term things that they could do to temporarily, pump up the stock price, however you want to say it, but that long-term strategic decisions are being made. And if we see a confluence of better metals prices and the big developers coming to the table, that we could see some superior price appreciation potential in the First Mining shares. I guess my question for you is it sometimes painful on a short-term basis to make the good, sound, long-term strategic decisions?
Well, depending on if you're an investor, it's always tough. The mining space is a very difficult space to invest in, and I advise investors to always look at management. Always look at what management owns, what the board of directors owns. What skin do they have in the game, and how much are they aligned with shareholders, and have they had successes in the past? Have they made millionaires out there? What kind of wealth have they created? And if you go after those successful mining teams, you make your investment, you make it much more likely that you're going to make a profit on your investment. Just be careful. And in the case of executive teams, that's a different story. It's challenging all the time. Mining is a difficult space, and it requires patience. One thing that I've learned, and I know Dan is very familiar with, is that we have to be patient. You're dealing with Mother Nature, and the discovery of Springpole was in 2010, as I mentioned, and it's now 2023, and it's still not producing. It'll be producing soon, and we're finally getting to a point where we can actually see production in the future. Which is great, but that's taken 13 years to get there. So most of the de-risking is gone. Du Parquet was an old mine, so it's a much easier situation to get back into production. But if you're an exploration company, grassroots, investors just simply have to be patient, and I think that some retail investors don't quite understand that.
Right. You talked about skin in the game, and I think it's important for people watching this live or on the replay uh, to realize, Keith, you've been a major buyer of shares in First Mining Gold. Is that a safe? I think I saw a public filing back in April. Just a month
Yeah.
ago, you bought 250,000 shares. Another
Yeah,
200.
usually about every quarter, Ron.
Mm-hmm.
I try to put money into the stock. I the catalyst for management to make a profit is usually some major M&A activity and or some kind of major transaction. And so I know I never expect to sell my stock. It's you'll never see me on the offer, selling my shares. It'll because I own so much, I couldn't sell it even if I wanted to. But it will eventually. Hopefully, I'm expecting that there will be a major transaction in the next 3 to 5 years, and it'll be worth if people want to sell it to me at 18 cents, knock your socks off. I don't understand why they want to sell it there, but I'll keep buying it.
Just for the record, I bought some more at 18 cents myself. Not quite as many as you. And I know, Dan, you also have what to you is a material amount of money invested in the company. I think that's important for investors to realize and to recognize when they're evaluating a company. How much skin does the CEO have in the game? And
well, to that point, Ron, when I hired Dan, basically his commitment to me was he was going to put $500,000 into the stock immediately through a private placement, which he did.
Wow.
So within days of him becoming CEO, he wrote a check, and a big one.
Mm-hmm. Yeah. And then the next year wrote another one of the same size. And every year as I take down, I have to pay taxes on my RSUs. Those kind of continue to add up. I put another $100,000 into the company in the financing we did in August of last year. So yeah, I'm not quite as many shares as Keith yet, but certainly that position's growing. And I think, and it's not just me. I think if you look across our entire executive team, it's very heavily equity compensated. And there's a reason why we're able to attract the people that we can, and the caliber of talent that we've been able to bring into the company, in part because they see that upside, right? And they're willing to trade off cash compensation that they'd get at a big company for equity exposure that they think is worth, 5 to 10x what they're getting it for today. So yeah, you really do in this company have real alignment of interest with the shareholders.
Great. The market is forward looking. What will the market see in the next year or two, Dan, from First Mining that you're most excited about? I think it's important that we focus and recognize the fact that you are there. There are some very exciting developments at the company with these big, 2 flagship, 5 million ounce projects. There's 4 other projects as well, but can you share with us maybe what you're most optimistic about in the next year or two?
Yeah, so let's look at the next 12 months. Our goal is to have continuing exploration happening at both projects over the next 12 months. We actually have a drill turning at Duparquet now. Really the first drilling that we've done there, and I think we're very excited about the prospect of how that deposit can grow. James Maxwell and his team, have done a lot of really good work in a short period of time to go back and really fundamentally understand what was done at Duparquet, but more importantly, Ron, what wasn't done. And the reality of that situation is that there's, there was a company that was moving it forward, Clifton Star, that kind of ran out of money and ran out of time. So they weren't able to keep drilling things that they had already identified. There's just in strike extension and going to depth, we think, it's not unrealistic to think you could double the size of that project. That puts it in a pretty elite league. So exploration results coming from there. We'll see some exploration results coming from Springpole. You will see, or hopefully would want to see some agreements starting to be signed with the Indigenous communities, particularly around Spring Pole as we move forward. There's some really good process that we're working on with the communities around Spring Pole. And importantly, the environmental assessment process is ongoing. And what a lot of people don't appreciate is that Spring Pole is really one of the next big projects, big gold projects in Canada to get its environmental assessment. Like, there's not that many big projects in the queue ahead of us. Certainly in Ontario, I don't think there's any. So this is a really advanced project. So submitting that final EA next year, I think when people see that, we might need to explain it a bit more, but that is a major, major de-risking catalyst. Because again, what a lot of people don't understand, Ron, is we've actually received and responded to all of the comments of the regulators from when we submitted the draft EA a year ago. So still some things we need to work through, but I don't know how many people here on the webinar play, Texas Hold'em poker, but like, we've seen the flop, right? Mm-hmm. So they're only going to put down 5 cards. We've seen 3 of them, maybe, maybe 4. And I think it's tough for investors to understand that. But for those of us who are on the inside moving these processes forward, it's what gives us this real conviction about how the process moves forward. So, on top of that, we've got an economic study underway at Duparquet, which I think will frame, one potential avenue for development. Lots of good things going on at Duparquet as well. But, really, I think if you bring it down to its most fundamental level, what I'm most excited about is really demonstrating that, on now almost 13 million ounces that we have in this company is still just the starting point, right? And that we have district scale exploration beside these already established resources.
So my blood pressure goes up when I think about how mispriced the market has the stock right now. But it's a great opportunity, right? I mean, all the assets. Keith touched on it. You touched on it. The amount of work that went into being very selective to put this group together when the company was first formed, and we get to this point now where 2 major development projects in Canada, I can't say that enough, both of which have 5 million ounces. All the work that went into that's been accumulated over the decades, and I think what's exciting, and you touched on this, is the because of exploration initiatives, the amount of gold can grow. I mean, it's almost like it's and correct me if I'm wrong, but as a retail investor may look at this. Sure, it's a development company. They already have a defined amount of gold, but there's this little extra bonus that could occur, right? Which would be the potential for some great exploration success because, of everything you've done over the last few years, expanding the land package around Spring Pole, putting the deal together with Duparquet. Is it exciting to you at all? Maybe I'll ask Keith that this resource level could grow significantly.
Well, we think so. When we did the initial due diligence on Spring Pole, we were buying a 5 million ounce asset, that's compliant. This is 43-101 compliant ounces, so that's a Canadian standard. And it's every mining company out there has compliant ounces, and they have ounces outside of compliance, and they're outside of compliance for many reasons. It's not drilled effectively. There might be one hole 300 or 400 meters away, or whatever the case may be, 1 kilometer away, 2 kilometers away, showing gold, but you can't just join the dots and say, hey, we're going to double our resource because we think there's gold 1 kilometer away. That's not the way it works. You have to spend the time and drill hundreds and hundreds of holes, and you have to have proper spacing between these holes, 25 meters, 50-meter spacings, in proper grids, to develop a resource that becomes a publicly reportable 43101 compliant resource. And that's a very difficult process and very expensive process to accomplish. So when a mining company says they've got a 43101 compliant resource, that's real. And yet on top of that, there's a whole bunch of ounces that are out there that haven't met quite that standard yet. And in the case of both Duparquet and Springpole, there's gold all over the place. But it takes time, and that's why we're drilling at Duparquet right now, and then we have been drilling at Springpole this past winter to find out where the extensions of these ore bodies are, so that we could put plans together in place to drill out and infill all this drilling to be able to add those ounces to the current compliant ounces. And as I said, it takes time and money to do it. And we know these compliant ounces of 5 million at Springpole and 5 million ounces at Duparquet are underestimated. We know that, but we can't just throw a number out to the public and say we think it's this, because that's against the rules, and we're not allowed to say that.
Well, and the other thing that I'd say, Ron, that I think gets lost on some people is just the leverage to the gold price that having those existing resources gives you, right? Mm-hmm. And we've talked about this before, but an example of it is if you look at our pre-feasibility study at Springpole, which was run, the economics were run at a $1,600 gold price. It looks pretty conservative these days, right? I think if you look at those economics at every, $100 an ounce higher gold price, you increase the net present value, the fundamental value of that asset increases by, on a pre-tax basis, $250 million. On an after-tax basis, $150 million US. It's more than our market cap of an increase for every $100 on the gold price. So, and this resource was done $400 ago. I think those of us that have a view that Keith said the $3,000 gold, I have a lot of other very smart market commentators, people like Ronnie Stiefel at Incrementum, who's, betting the farm on $2,500 this year at a minimum. There's real leverage just to the fundamental value that we have here. So the exploration is certainly additive to that, but it gives you then kind of a double multiplier, right? Because the resources can grow and the value of those resources grow as well.
Yes, I like to think of it as and you and I have talked about this before, Dan, like a confluence of factors coming together that could potentially, right? We're not offering financial advice, but could potentially result in just some great appreciation for the share price. And it's hard to predict until after it happens, is the way I like to phrase it. What about Canada? I don't feel like enough attention is being paid to the fact that that all of your projects are in Canada. And to me, correct me if I'm wrong, but I get the impression that Canada is becoming a much more attractive mining jurisdiction than maybe some of the South American countries. We've heard, some challenges with Mexico. Do you see that the fact that all your projects are in Canada? Do you see that as a strategic advantage?
Yeah, I mean, I'll start on that. I think 100% it's a strategic advantage. Keith, as the CEO of First Majestic, has the luxury of looking in a bunch of different jurisdictions for growth. First Mining was set up, as he said before, really with kind of a focus on good jurisdictions, but migrated pretty quickly to Canada. I think when you're talking about avenues for companies to make multi-hundreds of millions of dollars of investment these days, and Keith said, again, leadership of producing mining companies have tended to be pretty nervous since 2011. it's hard to find too many jurisdictions that one would say have been improving. It's getting a lot harder kind of all over the place. The one thing you never need to worry about in Canada, that jurisdictional element of it, a qualified, very capable and supportive, government infrastructure that understands mining, is permitted mines. The province of Ontario has permitted 4 or 5 big open pit mines in the last 5 or 6 years. Province of Quebec, this is the bread and butter of industrial strategy in the province of Quebec, and really, our reception in both of those jurisdictions from a regulatory perspective has been fantastic. We've got great support. I think jurisdiction is more important than ever. But I'd turn it over to Keith for some more kind of firsthand commentary on that.
Well, it comes down to land tenure. I think that, and that's one of the issues in South America and growing in other parts of the world. We've seen issues in Europe and recently, of course, in Peru and Argentina, Bolivia. You name it. There's all kinds of issues around the world. And one thing that you don't risk in Canada is land tenure. You're not going to wake up one morning and losing your asset. And when you're trying to raise $500 million to build a mine, that's kind of important. So you're making a big investment and you're building infrastructure, and you need to have a 20, 30, 40, 50 year lookout. And Canada gives the investors that kind of comfort where they can make those long-term bets and not have that political risk. And also holding costs are some of the lowest in the world. Holding these are large land packages that we have in Quebec and Ontario, and the holding costs are quite reasonable, compared to some of the other countries around the world. I would call them quite cheap, actually. I shouldn't say that because maybe the government's listening.
Yeah, hold on a second there. Reasonable. Let's stick with reasonable.
Yeah, okay. Right. Efficient.
Yeah.
Dan, what about the people in the company? It seems to me that you've been able to assemble an A team. You've got Steve Lines, who's kind of heading up the permitting and community relations, James Maxwell. How were you able to attract such top tier people? Let me go a little bit further on that. I know that Steve Lines was involved with permitting the Greenstone mine that's under construction now by Equinox, and several other large mines prior to that. James Maxwell was instrumental with is it Sabina Gold? How were you able to attract these top? I mean, there must be something there that enabled you to be able to get that caliber of person into the company.
Yeah, and well, we talk more often about those two. We've got a bunch of other great people at the senior leadership, and really all the way down through the team. And I think it comes down to a similar theme. We've been able to attract people, I think, on the back of a bit of a vision that really started with Keith and with our board on how we are going to advance these projects. I think the projects themselves are really interesting, that the people who you see that we've been able to bring in have usually an understanding or a background to be able to look at what the outside world is seeing as risks in the company and really see those as opportunities. And that was, the first conversation I ever had with Steve around building dikes and dewatering Springpole. He's like, I've done this twice in the north, once as a regulator and once as a proponent. This is, this is done all the time. So, same thing with James Maxwell, was providing, kind of the playing field, the opportunity for exploration for him to get back to a part of the world that he, in large part grew up in and loves. Particularly around the Bertucci, and then having a bunch of real opportunity for them to be able to build out their teams and have those teams do really meaningful work inside an organization that we try really hard to keep not bureaucratic. And it's a small team, it's pretty consensus driven. I think we make good decisions, but we can make decisions reasonably quickly. I think that's a big part of it. I like to think it's part of the culture of the place that, it's a lot of people who really like getting things done. So the result of that is when you have really good people, and the sort of age and stage of people we've been able to attract are very, very difficult people to find in the mining industry right now. People with 20 years experience, 20 to 25 years experience, coming into those, their kind of first VP or real leadership role. Those people are like gold dust. And I think it says something about the company and kind of about the culture of the place that we've been able to bring great people in and keep people here.
Thank you. Thanks, Dan. And yes, I want to make sure I recognize there are a lot of quality people at First Mining Gold. I always tend to focus on Steve and James Maxwell, but I know the whole team there is doing a great job. So hats off to all of them. Keith, when you founded the company in 2015, you had a vision for where you thought it would go. How close are we now to that original vision? And the second part of my question would be, obviously you're continuing to buy shares. Anyone who makes an investment is I guess trying to look out into the future. What's your vision for the future of the company? Maybe another 8 years from now, or maybe another 5 years from now, if you don't mind touching on that.
Well, first off, I don't like single asset companies. Mining is risky enough as it is. And, if you have all your eggs in one basket, it's just, I'm not saying it is always an issue, but it can be an issue. And for me, I like to kind of, be on the right side of a bet. So rather than playing roulette, and Dan brings up poker, but I'm a big roulette fan. But I like to at least with First Mining, all these companies that we bought, these 8 companies that I was able to buy over that period of time, they're all single asset companies, and they all became unfinanceable because they're single asset companies, in my view. So putting a portfolio together as we did at First Mining, it's pretty intriguing. And today, through Dan's efforts over the last 3 years, First Mining is the strongest financially it's been, really throughout its history, and that's because of the smart deals that have been done on the portfolio. So we've got equity positions and partners, and I've been able to sell some assets for cash, preventing dilution. We've done a pretty good job of monetizing the portfolio, and we still have some great assets, even including or in addition to Springpole and Duparquet. But it wasn't for that initial acquisition campaign that I launched, we wouldn't have been able to finance Springpole or even purchase Duparquet. So through those efforts over the last a few years, we've been able to really de-risk and continually improve these 2 assets, and we're going to continue to do that.
Outstanding. Yeah, to me, it feels like there's a diverse. I mean, we haven't even touched on the other 4 projects. Just for the listeners who are here, First Mining also has a Hope Brook project in Newfoundland, which they've partnered with Big Ridge Gold on, and there's development activity going on there. There's Pickle Crow in Ontario that they've partnered with Autico. That's an Australian company. They've had some great drilling success, and Dan, correct me if I'm wrong, but they've even come out with a resource estimate.
Just put out a new resource estimate last week that's now up to 2.8 million ounces at 7.2 grams, which makes it, I think, one of the biggest high-grade underground deposits in North America now. And they have every confidence that in another year with more drilling, that goes over 3.
Wow.
They're doing great work, and that's really just on the near mine stuff. I happen to have come from a a good catch-up session this morning with Darren Cook, who's the CEO of Ateco. So I'm very current on it. He happens to be here at this conference.
You're up to speed. You own 15% of Treasury Metals, another Ontario development project, and of course 100% of Cameron. Correct? You guys still own 100% of the Cameron project.
Yeah, absolutely.
Significant. Can we go through some questions?
Sure. Fire away.
All right. Dan,
watching them come up. I've answered a couple here, but
thank you, Keith. Dan, how great would drill results have to be in the current environment to get real market attention? You care to tackle that one?
Oh, well, I think that's a really interesting question. I think it's what those drill results demonstrate that is going to be really important. So the drill results themselves, if it's, another 100 meters of a gram, or 100 meters of 2 grams, or 300 meters of 2 grams, and you demonstrate that there's more potential at Springpole. There's always been a widely held thesis that maybe not that widely held, but what we have at Springpole is kind of the top half of the deposit. When we find the rest, or find the real part, people get excited. I think specifically on those projects, when we can demonstrate that what we have in the Birchuchi Greenstone Belt is an exploration district that people will be exploring for a generation, when we can demonstrate that there is near mine potential at Springpole, which again, that could be 1 or 2 holes, and we've got some really interesting, much better structural understanding than we've had in years. And actually wanted to test one of those this winter, but the making of ice didn't cooperate with us in terms of being able to drill from the ice. And at Duparquet, I think if we can demonstrate with 3 or 4 drill holes that, what's left behind, or, the sort of extension potential of these deposits, like down plunge, along strike, and a depth, shows that, the 5 million ounces there is really just the starting point. I think any one of those things could be enough. Maybe the market doesn't get super excited about it right away, but those are the things that, that mining company that's looking for their next project, those check really, really important boxes for those companies. But yeah, I think anything that we do to demonstrate the potential for ongoing growth at both of these big projects, should every ounce that we can see that we're going to add makes them more and more unique and more valuable.
Outstanding. Thank you. Another question came in about Springpole. Do you think that the company alone will try to develop it all the way to a mine, or will you eventually be looking for a partner?
Well, I'll give my thoughts, and then I'll let the chairman have a word on it too, because this was something that when you go back even to the founding of the company, there was some real thought on partnerships and using partnerships strategically as you move forward. So what I've always said, Ron, when we've talked about it, and I will continue to say this, I think that is a decision that is best made at the time when you're really at the point of maximum understanding of the deposit and you have the ability to make that decision. So, when we have a team that can get this project through the EA process and get it permitted. And I think at that time, when you remove all of these, perceptions of risk around it, and you demonstrate to people that, they didn't believe for a long time, they kind of have to believe now. That is, I think, the best time to look at what all of the alternatives are, and whether that's, us being in a $3,000 gold market and our share price is $5 and we can, raise the money to build the project ourselves. I think that might steer you in one direction. I think we'd have every capability to build a team to be able to do that. But we would have to build a team that has construction experience to do that, and build out our team. Is it something that, when you get to that point, someone else says, this is the project that I want to build, and they come to you either with a partnership proposal where We've seen examples of this done last week. It was an interesting deal that Osisko did with their Windfall project, where they basically brought in a partner for 50% to develop it. Bought a big interest in it, and more or less leaving Osisko in a kind of free carried position to own 50% of it going forward. I think those types of opportunities are pretty valuable for a company. And often kind of, shunted off to the side. So it depends on who your partners might be. But at the same time, if we get to that point and another company sees this as really what we would think is really compelling value, then I think you have to look at that as the opportunity as well. And what's interesting is, we then still have in the company all of these other assets that, you could then be incredibly well funded to continue to advance. So there's real strategic optionality as we move forward there. But, I think it can go down a lot of those paths. And I don't think we should prejudge which path it should go down until we're really at the point where we're comfortable it's the right time to make that decision.
Wow.
But Keith, what do you think?
Well, yeah, I was thinking as you were speaking, but I look at Duparquet and Springpole as tier one assets, and a tier one asset is very rare, and we've got two of them. The big majors, the Newmonts and so on, Barracks and whomever, they need tier one assets. Their gold is dropping on a daily basis. Every day they produce an ounce of gold, their reserves are dropping. They've been very inactive. Yes, we've seen a couple of not small, but we've seen a couple of deals. It shocks me that these majors aren't gobbling up these developers right now at $2,000 gold. But and you never know what the catalyst is. I'm sure in these boardrooms they're talking. At First Majestic, we're a relatively large company, and we're always looking for acquisitions. We tend to be a little bit more aggressive than some of the others mining companies out there, but nevertheless, I put together $2 billion companies, and my goal in putting First Mining together was to put my third $1 billion company together. But quite frankly, I'm not sure if we're going to get there, because I think it'll get taken out before we get there. The whole strategy of current management, Dan, is to de-risk these assets and continually de-risk these assets until we make a production decision. And we won't stop unless something happens, a big catalyst comes in whereby a major comes in and takes the company out, and you can never predict that. And I'm not suggesting it's going to happen tomorrow, but I think that as these assets get de-risked, I don't think this is two of the best mining jurisdictions on the planet. These are two of the best gold assets in the world, or in Canada at least. They will be bought, as far as I'm concerned. How that looks, when that's going to happen, it's not even worth speculating, because we just simply don't know. But I hope it doesn't happen, because my goal is to build my third $1 billion company.
Thank you, Keith. And I think maybe what I heard you say too is that you hope that if and when the assets are monetized, that it's done at a time when it's more of a seller's market, when sentiment has improved.
Yes, that's right. Dan's got a lot of work ahead of him. He's done a lot of good work, but there's still a lot of work to do.
Very true. It never ends.
I meant overall market sentiment, not specific to First Mining Gold. Well, I want to thank you, Keith and Dan, for doing this today. On behalf of everybody that's joined us and will be watching the replay, I think you were able to shed some additional light on the opportunity at First Mining. I personally think that it's a great value proposition, a great investment right now. I do think that there's potential for above average price appreciation in the stock, and just thank you for your time. And if people want to check out the company, Dan, firstmininggold.com.
www.firstmininggold.com, or feel free to get in touch with Paul Morris at paul@firstmininggold.com.
I almost forgot to tell everybody, yes, get in touch with Paul. He will get back in touch with you with any questions you have. And thanks again, Keith. Thank you for your time, Dan. And I'll see you guys soon.
Thanks,
Great.
Ron. And
Thanks,
don't forget, we're all on Twitter as well. Follow me, follow First Mining on Twitter. Everything's there for your pleasure in reading.